Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, going to talk about some of the recent volatile names that I've been keeping an eye on and trading, and also just a little bit of an overview as to how I approach watching names like this when volatility does pick up. So when newer traders start out, they get very overwhelmed because they don't know what to trade. There's so much out there, and they're really just looking at the next shiny thing on social media that gets a lot of hype. And they're going over here, and then the volatility dries up, and there's not much opportunity right when they get there. And they look over here, and everybody on Twitter is talking about this name that just had a headline and just gapped up huge. And it's really easy to lose money that way, just bouncing all over the place. The common factor that I find in consistent longer-term traders is they have a core of names that they constantly are trading, and they'll branch out and go to other sectors and opportunities as they arise, but they have that core to always go back on, and they can just wake up every morning knowing, I'm going to look at these names. There's no scattered brained attempt to try and find what to trade for that day. So it's important to get familiar with a certain name because there's a lot of different little factors when you're learning how something trades. Now, obviously, all things trade the same in the sense that they either go up or down, but there's a lot of very intricate details that differ. The amount of volume, the spread of the bid and the ask. Is it a tight spread or a wide spread? If I'm going to market buy on Apple, buying and selling shares, it's going to be a lot different than if I were to market buy some of these low cap names that we're about to look at that maybe have 0.5% or even 1% spread between the bid and the ask. So volume is a big factor to that. And it's just getting very comfortable. If I know that when I'm trading CGC, I trade X amount of shares for my standard position size, it's just very comfortable. We get into a muscle memory routine of that comfort. So it's important to have that home base of comfort, but then branch out and look at other names. There's also a whole lot of red flags. MBOT recently is one of those red flags where we see the huge hype and the huge gap and everybody's talking about it, and then the company seizes that opportunity to trigger dilution and try and lock in selling shares at a higher price. And you can see what the price did. It hit 2015, and next thing you know, it dropped down to 1035, a 45% drop in less than 2 full days of trading. So with the great reward, there is great risk there as well. So we just have to be extremely cautious when jumping into new names, because if I've never heard of MBOT and I'm swing trading it now as a bull because everybody's talking about it on social media, well, maybe I don't know that the company is low on cash and that a raise of funds is likely to be coming. So recently there's been a lot of movement in biotech and healthcare sector names. The sector has been performing really well with the market as a whole, and we have little companies that are either getting bought out for 100% premiums or have trial news and see big runs. We're in a state right now of the market where the market is so euphoric, and I've seen this in plenty of sectors that have had crazy runs, whether it's crypto or the marijuana sector, where bulls are just looking, where can I put my money next? Or name runs, and they say, okay, let's go to the next one. And that lasts until the music stops playing and there's no chairs left, and then we drop significantly, and that bull euphoria market is no longer present. But we're in that bull euphoria market, so right now, every day, it's like the bulls are looking, where's the next name that we're going to run to for short-term high percentage gains? So for MBOT at this point, I would be looking for a daily higher low to form. The volume is dropping off. The hourly downtrend is clear. Anything under 1445 is an hourly lower high. And I would either need to see hourly oversold conditions for me to be interested, or for an hourly trend change to indicate that a daily higher low has been established. But again, just completely deflating that bull momentum. ITCI is another biotech sector name to be keeping an eye on. And I'm looking for a daily higher low here as well. We don't have the same kind of significant pullback. We topped out at 43 and we pulled back to 32 at this point. So pulled back about 25%, much different than 50% in the same period of time. But it's that initial big bull move, now healthy consolidation, to look for the daily higher low and then looking for a move forward. So this is the kind of scenario where I approach these tickers and I set my game plan as to what I need to see happen to make me interested. I don't go into the day saying, I'm going to trade ITCI today. I go into the day saying, I'm going to trade ITCI today if, let's just use this as an example, if we cannot break resistance Monday of 39.25 and we pull back and look for an hourly higher low to form compared to 32.77 and 32.77, then I will look to make an entry and use 32.77 as a stop level. So that would mean that I'm looking for an entry on a higher low, because then an hourly trend change would mean our daily higher low is established and we would then be looking back up to the recent resistance level. If I don't get that set up, let's say first thing Monday morning, the bulls keep this move going and they just head right for 39.25 and break that resistance. That would be way too extended for me to be interested in a bull entry at that point, and I ditch the ticker and I go on to the other ones that I'm keeping an eye on. I remain very picky, and the trade setup has to come to me. I'm not going to ITCI looking for a trade setup. I know the trade setup that I want. It has to come to me for me to trade it. So keeping an eye out for a daily higher low on ITCI early this coming week as well. Another sector of names that we watch is recent IPOs. Recent IPOs have more volatility because they have less previous price action of established ranges. They have less market makers that are active, keeping a tight bid and ask spread on the stock. But one that I'm interested in is in work. And we use Slack for the Chart Guys chat room community, so I'm very familiar with it, but I'm interested in a bottom being set. It's been nothing but weakness since the IPO, and we see, if you go back and look at IPOs in history, go back and look at Facebook once it hit its all-time low after the IPO, or Twitter after it did, and there was some significant upside from there. So what I'm looking for is the first shift. Right now, it's all bears. It's all supply outweighing demand, and the first time in the history of the stock where that will shift, there's significant gains to be had off of that all-time low. So right now I'm liking the base of support that is being built down here. 1953 was our low. We see a resistance at 23.55 where we topped out, and we've now been trading within this price range for almost 3 months at this point. So that's building a nice base of support. The bulls are attempting a higher low at 2015, and if we can break 23.55 from here, we will change the weekly trend to a bullish uptrend for the first time in the history of the stock. So that will have my attention. The way to play this would either be off of support, bottom fishing 1953, or on a resistance break. So I know what the longer term weekly setup is. I look at the daily chart and say, okay, what's it looking like here? Well, we've come straight up 2015 with no clear daily trend change from that point. So I can say if we were to just head up in the next week and break 23.55, we would be too extended for me to be interested in any kind of entry on that trade. And I would just skip it and go find something else. If I'm going to be interested in this trade, I need to see an inability to break 23.55, a clear daily higher low to form, and then once that clear daily higher low forms, I can either make an entry and use that level as a stop, because if we were to fail resistance and then lose the daily uptrend, that would be a red flag, or I could make an entry after that's been set and then hope we get the bull break and weekly continuation. So that's another one that's, again, I know what I need to see for me to be interested. I have it written down next to my computer as a ticker to be keeping an eye on, and now it's just whether or not that setup comes to me or not. So I am interested in work for a potential weekly trend change in early 2020. PTON is another one with a ton of hype on social media, a lot of talk about it when it was on its way up, and we've now pulled back significantly. With recent IPOs, you'll often see big equilibriums. No resistance on the way up, the bulls run with it. No support established on the way up, the bears run with it, and then we look for an equilibrium to be the result. So we're scouting for a weekly higher low to form on PTON, and I would say anything above the all-time low of 2046 is that all-time high, or is that higher low. Another note, look what happened after we hit the all-time low. We started with over a month of weakness, we hit our bottom, and then we ran very significantly, which is again why I'm interested in work for once that bottom is hit. So for PTON, the daily time frame, bullish reversal candlestick on the daily time frame Friday. I was interested in an entry Friday, but I was distracted with other names, didn't get a spot that I liked. So I head into Monday saying, all right, this is the hourly setup. We know we need an hourly trend change for any kind of bounce follow through on the daily chart. There's a lot of space to bounce on the daily and just be looking for a lower high to be set compared to 33.50. So the hourly time frame, I know that I want to see a clear trend change. So if on Monday we top out early in the morning and we pull back, I will look for a potential bottom fishing play off of 25.67. The reason being the size of the bounce above that level was significant. The bulls created a lot of space to form that hourly higher low once we do top out. And we're looking at roughly we could pull back about 6% or so and still be maintaining that support. So I head into Monday saying if we consolidate and I get an entry on an hourly higher low using 25.67 as a stop and looking for the hourly trend change for the daily bounce to get follow through, that's a setup that I'm interested in. So again, I'm doing my weekend preparation. It's Sunday right now. I know that I'm interested in this setup on Monday, but same thing. If we just see a bull move first thing on Monday and we run up to 28.50, I'm no longer interested. I would say, well, I missed it. That's too much of a bounce from the low at this point for me to be interested. Another name, Roku. This is more of a mid cap now. These last two were smaller cap, recent IPOs. Roku is a mid cap. We've been keeping an eye on Roku for a while. There's great volatility. Just look at the average range of a given day to know if it's a good day trader or not. And you can see the size of these candlesticks and the range that, yes, this is definitely very volatile. So we were looking at some resistance. The range I'm watching right now on Roku, we had an all-out dump. And we had the high of that dump bounce at 153.35. That's the most important level for me because that's the highest price we've seen in a month since that weakness. We then dropped down to a lower low with no bear follow through, significant bull move, unable to break that resistance, and just like that, the bears are taking back over. So at this point, we have not seen a clear, convincing daily trend change. We had our low of 127, we went all the way up to 150 essentially, and no daily trend change took place. So now we're looking for the daily higher low compared to 127.53. If we see hourly oversold conditions, that's a good time to start scouting for the potential of a daily higher low. Otherwise, patiently waiting for the hourly trend change to give us the daily higher low. So I am interested in looking for a daily higher low on Roku. There was also a great bear signal on Friday. As soon as we broke the low of Thursday on Friday, that told us daily consolidation was underway, and we had follow through from 143.82 down to 139. Two high cap names. So these are names that have a ton of volume, a ton of market cap, and for these names, a 2% range is a big day. For Roku, 4 to 5% is one of the bigger days, and for these small cap names, 20% is a big day. So the smaller cap, the less volume we usually have, and then there's a big influx of volume, the more percentage moves you're going to see. Netflix and Tesla have tons of market makers that have tons of shares that keep a tight bid and ask spread and don't allow for 10% moves in a day like we see on the smaller cap names. So Netflix was a name that had huge bull moves on the way up and had just saw a great bear opportunity on Friday as well. So this is one where we had a pattern of a higher low every single day for 11 days in a row. As soon as that broke on Friday at 332, we then dropped 2% very quickly from that level. So we're going to be watching. I'm watching Netflix for a monthly equilibrium if we're going to talk big picture. It's a little off topic for this video, but I'm watching for a monthly lower high compared to 386, and I believe we'll see a monthly equilibrium break on Netflix sometime in 2020. It's going to be a good one to be watching. But as far as the daily time frame goes, we got way overextended. So now that daily consolidation is underway, and we're looking for a daily higher low to be established. Again, keeping an eye out for two things: either hourly oversold conditions for the first time after a big bull move, or an hourly trend change that tells us the daily higher low has been established. But again, the past 2 weeks, and it's not always the case, but the past 2 weeks, tons of volatility for a large cap on Netflix. Same thing with Tesla. You know, you look back at my trading history, I probably traded Tesla maybe 10 times in 2019, aside from the last month. And in the last month, I've probably traded it maybe 40 times. So that opportunity showed itself to me in terms of its blue sky breakout, tons of volatility every day. As a day trader, I know the past 2 weeks, every morning I've approached the day and said, well, I know I'm going to keep an eye on Tesla because there'll be opportunity there in either direction. And I'm also watching the pattern here this coming week of a higher low every single day. At this point, I'm considering it 15 days in a row. You could say, well, we broke the low of Thursday on Friday, but we only broke it by 24 cents. I consider that a double bottom. And if we see a bear break more convincingly of 426 on Monday, I'm going to be looking for a decent little bearish opportunity for a short-term trade as we look for a daily higher low to form. But again, it's just volatility every day. And the 2-minute time frame first thing in the morning gives us some nice equilibriums. Look at Thursday. So Thursday I traded Tesla using the 2-minute time frame in the morning. We had a big bull move, a big pullback, inability to break resistance with a lower high. I entered here for a 2-minute higher low, anticipating an equilibrium. I had a stop under the low of the day, and then we got the bull break and significant follow through, and I could let that trade ride. On Friday, I did the exact same thing with Amazon, but in the other direction. So Amazon on its 2-minute time frame on Friday gave us a nice clear equilibrium to be watching. High of the low of the day, high of the day, higher low, lower high, higher low, double top. I shorted multiple times here. I flipped Amazon like a madman on Friday, but I kept a bearish position with my stop above 1902, entering on the 2-minute lower high. We then had a bear break. I then let the trade play out. We then tested resistance one more time, but my stop did not get triggered because we did not see a new high of the day, and then we dumped. And that trade became very worthwhile at that point. So again, just watching highly volatile names in the first 15 minutes of trading, the 2-minute time frame can be a good guide. I generally don't trade in the first 15 minutes of trading, but when there is a clear 2-minute equilibrium, that's when I'm very comfortable because the risk and reward levels are very clearly established. So that's all I've got. Hopefully that's a bit insightful as number one, tickers to be watching this coming week, but also how to establish a core of tickers that you get very comfortable with, and then still keeping your eye on other plays and names that you are maybe less comfortable with, but perhaps adjusting position size when you head to those different names. For me, I know when I'm trading, day trading Tesla and Amazon, I'm market buying and selling because that doesn't matter to me as this bid and ask spread is tight. But if I were to do that trading PTON, it's a very different story. And I have to use smaller position sizes than I can on those other names because, again, liquidity is very different. It's not the same animal. I can't apply the same exact trading style to those large cap names as I can to these smaller cap names. I have to make an adjustment to reflect the different market conditions. Hope you have a good rest of your Sunday, and we'll see you this coming week.